Can you hear me?
Hello, sir.
I
So
can hear
the
you.
market broke that demand zone. It's going to sell.
The market broke the demand zone. So now that the market has returned back to it, it is going to sell from that place downwards. So it can still fail though. It's not as if everything is a must that it must happen. Trading,
It can still break that zone. Go buy.
yes, because there is another supply, another zone here.
Up.
I don't know whether you are seeing this zone that I
Yes,
just
I've
drew
seen
now.
it.
This zone initially market broke it upwards and returned to it and bought. So now this is the second time it's returning to it. It can still buy again. But the reason why I'm choosing to sell is because this week has been selling. This is the beginning of the week. This is a 4-hour time frame. So, and
Yes.
in the 4-hour time frame, every period like this is 1 week. Are you getting me? So every candle is 4 hours. Then from this line, these dotted lines, these vertical dotted lines, between each of these lines is 1 week. So if I switch to a 1 hour time frame now, between each lines you will see is 24 hours. But for the 4-hour candle, between each period is 1 week. Are you getting me? So this is the beginning of the week at the top here. So the market started selling from the beginning of the week. So I believe that since the week is bearish, it's likely that the whole of that week will continue to be bearish. That's one reason. Second reason, this market has taken out what I will teach you today. They call this one liquidity. The market has taken out liquidity. This is a buy side liquidity. I will explain what that is to you today. So the market is not selling. So whenever market takes out a buy side liquidity and it starts selling, it's most likely to sell for a long time. So that is the reason why I'm selling instead of buying. But it does not mean I cannot be wrong. Do you understand me? I can be wrong.
Yeah, that's why your stop loss is.
You can see my stop loss here. I have a stop loss here. So
Close to
this market now,
where you bought.
Yes, this trade I entered
It's
now.
your stop loss. How many pips?
Okay, I want to show it to you now. If I put my cursor, this cursor I'm moving now, if I put it on top of the line, you will see the amount in dollars. Are you seeing it?
Okay, 2.37.
Yes,
USD.
minus $2.37. So if this market goes up and touch this line, it is going to stop. I'm going to lose $2, $2.37.
Minus 2.3.
Yes.
Okay.
Then look at the take profit at the bottom here.
Okay.
What are you seeing?
So you are going to, if it goes the direction, you are going to make $8.58.
Yes. So now this is my live account too. So this is one of my accounts that I trade. So it's a small account. So if this market now goes down, so that is one ratio. You say what?
Okay, that's what I wanted to ask.
It's 1:4.
I wanted to ask the ratio.
It's 1:4. If I'm risking 2.3,
okay,
and I'm getting 8.5, that's 1:4 now. Do you understand? Or 1:3 point something. Are you getting me? So you can divide it and see the number ahead. So right now I'm in profit, but like usual, market will always go up and down. So it can still spike up inside before coming down. So if it keeps spiking up and it touches the line, I will lose the trade. Are you getting me? So my prayer or my hope is that it doesn't. That is how we trade.
Doesn't touch.
And you can also see this inverted hammer. Let me clear these things I drew here. Can you see the inverted hammer?
Yes, the long one.
Yeah, so this blue one, so it formed
the one with the long width.
Yes, so it's forming at a supply zone. That is the reason, or a flip zone. You can call it a flip zone because it was a previous demand zone that has turned to a supply zone. So it's not called a flip zone. So that flip zone, there is this hammer, inverted hammer there. So that's why I'm also selling. So there are many reasons I'm selling. Number one, the week is bearish. The direction of the week has been a downtrend. 2, it has taken out liquidity at the top here. 3, is at a flip zone. 4, there is this inverted hammer here. Are you getting me? So I have 4 reasons why I'm taking this trade. Now even after the 4 reasons, it can still go wrong. Are you getting me? So, but if it goes wrong, I will not cry because I'm willing to risk that money, that $2 that you saw. Are you getting me now? So that is the way the thing is. That $2 is money, is about
Sir,
1.5.
what is a flip zone? Number 3 reason why you are selling. What is a flip zone?
The flip zone is a previous demand zone that have turned to a supply zone, or vice versa.
Okay.
That is what the flip zone is. So the value of $2 in naira is over 1,500 naira. Let me say about 1,006 or so. So I'm risking it to make $8. That's about times 4. How much would that be? Like 6,000 naira, abi? So this can happen this week. It can reach here this week. If it can reach here tomorrow, depending on how fast the market is. So you understand now? So that is how trading is done. Now let me also show you another trade I also entered. Are you seeing this one?
Yes, I'm seeing.
Okay, so I entered this trade today. So there's a reason why I entered the trade also. You can also see that it's the same thing. This market attempted to sell from here, but it didn't sell. Market came back and broke it up. So as market broke it, here now is no longer a supply zone. It has now become a demand zone. So when the market returned back to it with this one candle like this, I decided to enter. I entered. Are you getting me? So, and since I entered, it has been going up. So if it gets to where my TP is, this is $8 also. Are you seeing me? Are you seeing the value there? That is $8.
Yes, sir.
So then this particular one, now you will see that my stop loss is above where I entered. That's what you call break even. Let me do it again. My stop loss was here before. I was risking $2.5 before. So, but the market has entered profit. So I modified it by moving it up into above the entry. So this way, I can no longer lose this trade. If this market returns back to this place, it will stop me out where I entered, but you not being in loss. Do you understand? So that is what you call break even. That is what you call break even. Are you seeing it? So the market has broken even. What that means is it has become equal to where you entered. So I moved the stop loss to where I entered.
Yes, sir.
So that whenever the market comes back against me, I will not be in loss. I don't want to be in this amount of profit and then the market will not still come back and be out on a loss. Are you getting me? So that's a risk management approach that you use. When you have seen the market have moved so much in profit in your direction and you don't want to be a loser on a trade that has already started giving you money, what you do is you move the stop loss above where you entered. That is in the case of a buy, but in the case of a sell, you move the stop loss below where you entered. So that is also break even. So a break even is a risk management approach to avoid losing a trade that is already in profit. Are you getting me? And that is how you do it. It's a risk management approach to avoid losing a trade that is already in profit. So once this market continues going up, I will not be afraid. Now, if I even sleep, I will not be afraid that I'll be losing money. Once this market comes here, it will stop me out automatically in this place. I will not lose money in this trade again. But the other one that I showed you initially.
But you neither make profit nor loss.
And the profit will be very small because if you check it, I moved it to let me put it above it small so that you can see the value. Can you see the value? $0.1, $0.15. So that is what I will get. Very, very small, tiny dollars. Do you understand?
Yes, sir.
Okay. All right. Another thing also is if I move the stop loss very close, like away from the entry, like let's say let me move it up a little now to this $1. This is no longer called break even. This is called locking profit. I just lock $1 profit. Are you getting me? So it's called locking of profit. So I've locked profit, but I want to leave it at break even because I suspect that the market will return down, but it will not get here. Then the other one I entered, I can still lose money. This one is not break even yet. If this market come back up, I will lose that $2. Are you getting me?
Yes, sir. I didn't get that. Hello?
Okay, I can hear you. Can you hear me now?
Yes, I can hear you now.
I said if I move this stop loss away from the entry to somewhere like $1 in profit, this is no longer called break even. Some people still call it break even, but the right word to use is locking profit. So at that time, I have decided that I want to lock $1 profit. So if the market returns back here and stop me at, I will still get $1 profit. So that one, they call it locking of profit, locking profit. But here I put it initially is break even, they call it. When it is very close to the entry, it's called break even. Then when it is far away from the entry, it's called locking of profit. Do you understand now?
Yes, sir.
Okay. Then I now said the other one can still stop me out in a loss if the market turns back up here now and touches this red line here. It will be minus $2, 2.57. So this one can still take me out on a loss. But if I move it here now, it will not take me out on a loss again. Are you getting me? If I move it below this green line, it will not take me out on a loss, right? So that is for that. I wanted to just show you all of these things today so that you see that when market is buying, what you do is you look for it to break a supply zone and retest it. That's to become a flip zone. Then you join it buy. So now I want to teach you market structure today. Market structure. So the class will not be too long. Are you with me? Maybe in the next 20 minutes we'll be done. So I want to teach you market structure. So I want to turn to my whiteboard. Okay, so we're looking at market structure. Like I told you before, the market moves in this manner from bottom to a top, and then it returns back, right, to a low. Then it goes up to a high. Then it returns back to a low. So it returns back to a high. And then it continues like that. Okay, this is a structure of an uptrend. In the market, when this uptrend keeps going up, keeps happening, the market will keep returning back to a previous level. Remember, the market does not just move randomly. The level it will come back to will be a known level, probably a previous level like this. That's what it will return back to. So whenever the market returns back to a level like that, the expectation is for it to go up. It's for it to do what? To go up. Now, this particular level, this particular place the market returns to, this place here that I just drew now, this place that the market returns to, there is something that is there. Whatever will be there is something that is very important, and we call whatever will be there will look like one of the things I told you before, which is an inverted hammer, because that is a top. Are you getting me? An inverted hammer or a bearish engulfing. Are you getting me? An inverted hammer or a bearish engulfing. That is what will be in this area of the chart that the market will return back to. Are you with me now? So then,
Yes, sir.
sometimes once the market returns back here, it may not form another hammer or bullish engulfing before it buys. It may not form it. Sometimes once it just touches it, it just keep going up. So what we do, we set what we call pending orders. Pending order. What I showed you the last time is instant order, instant execution. That one you just press buy instantly and the market starts running in profit or loss. But a pending order is a market that you enter so that later on when the market gets there, it will trigger by itself whether you are there or not. So I will still teach you how to do it later with the phone, but not today. Are you with me? So whatever you will see at this area of the chart that I just mentioned here, whatever you see in this area is going to be any of these things I want to write now. It's going to be inverted hammer or bearish, inverted hammer or bearish engulfing. There are many other patterns, so I only taught you two, Abi. So these are the two. I'm restricting you to this so that you will master these ones first before you start when you are growing in the market, you start learning new things by yourself. So, but an inverted hammer will be here.
So, I understand. Once it touched that zone and I see inverted hammer or bullish engulfing, then I should know that it's a sign that it's going to sell.
No. You not get what I said. I said this other part of the chart, this high, you will see inverted hammer or bearish engulfing here. So when the market breaks it upwards like the way it did before, if it breaks it up like this, I said the market will return back to that same place, to return back. So when it returns back, it will buy because of the bullish, the bearish engulfing and the inverted hammer that is here. It will buy. So then I also said that you don't really need to see another bullish engulfing or hammer here before you join the buy. Like what I showed you in the second trade. Let me go there and show it to you now. You will see that in this particular trade, I did not wait to see a bullish engulfing or a bearish or a hammer before I bought. I knew that once the market returned back here, it will buy because of this bearish engulfing that is here. I don't know whether I should zoom it. Let me zoom it so that you see it. You can see that
zoom it, I'm seeing it.
There is a bearish engulfing here, Abi.
Yes, I can see it.
So because of this bearish engulfing that is here, when the market returns back, it will buy from it. This bearish engulfing was supposed to sell this market to this downside, just like the bearish engulfing. Though this one is not a perfect bearish engulfing chart, but this one is a perfect one. Let me draw it for you to see. This is a perfect one. You can see that this bearish engulfing sold this market from that place down to this place. You can also see it here at the top here. So I told you that whenever you see bearish engulfing at the top, or look at it here also, this other side, let me draw it for you. You can see it every year on the chart. Look at it here. Are you seeing it? Wherever you see that bearish engulfing, the market will always sell to the downside. So you see it here, it's sold down, right? You see it here, it's sold down, right? So when it appeared here, it's supposed to sell down, but it did not sell. So in that case, you would have lost money. Then when it broke it upwards like this, as it returned back to it, your own is to buy it. Are you getting me? So I'm not saying that you don't have to see a bullish engulfing before you buy, because even that bullish engulfing is already appearing here. Are you seeing it here?
Yes.
Are you seeing it? So it's already appearing there. So you don't have to wait for another one. So you only just to, when it returns back, you join like that. Okay? So that is how we trade the market. So now let me go back to the thing I was sharing with you.
Okay, sir, please, I want to find out, is scalping good?
Scalping?
Scalping, yes.
I don't do it, I don't like it. It used to make me misbehave. Everybody have their psychology. There are people that like quick money. It's for people like that. People that like quick money. They can put big money at once, but they will not stay in the market for up to 5 minutes. Are you getting me? As soon as they are in profit, they will just leave. But they will enter with big money, because if you enter with small money and you leave on time, the money you make will be small. So they enter with big money and they leave on time very fast. They don't spend more than 5 minutes. Maximum of 15 minutes they are through with trading for that day, right? But for the kind of trading I'm doing, I enter with small money and make big. For example, now you can see me entry with $2 and I'm targeting $8, 1:4. There are times I will enter with that $2, I will be targeting $20. Are you with me? I'll be targeting $20. Yes. That is swing trading. That is the type of trading I do. But those who are scalping,
swing trader.
Yes. But those who are scalpers, what they do is, let's say they will enter with $20 just to make $10 or $20 also. Very, very fast. They don't used to spend time. Their take profit is usually smaller than their risk. Are you getting me?
Yes, sir. What of intraday traders?
Intraday traders, they look like swing traders too, just that their trading ends in a day. They don't hold trades till another day. Are you getting me? Like if they enter a trade today now, they may not close it in 5, 10, 15 minutes so, but they will not hold it till the following day. So those kinds of people are called intraday traders.
If you enter trade, can you hold you as a person? Can you hold to the following day?
Yes.
Me, I don't have that kind of mind though.
And that's why you are learning. That's why you are learning. When as you start trading now and practicing, you will be learning how to trade. That's the type of person you are. So like someone like you now who cannot hold a trade to the following day, you basically trade on the 1 hour time frame. On the 1 hour time frame. Are you getting me? So that means you will start looking for your trade from the morning time, from the time like in the morning, right? So then maybe by evening you would have closed it, or by afternoon you would have closed it, or you enter trade in the afternoon, by night you would have closed it. So but someone like me now, I don't have a time I enter trade. I can enter anytime, in the morning, the afternoon, in the day, the night, you know, as long as I'm willing to hold it till get to my TP. Are you getting me? So it depends on you. You are going to learn it, but the strategy is the same. It works for whoever the kind of person you want to be. If you want to be the type that trade for only one day, it will work for you. If you want to trade for
do you encourage your students to do scalping?
No, I don't. Except you want to do it, I don't encourage it. You will not really become a good trader like that though. You need to understand how market moves and follow it. If you want to do scalping, it means you can just enter the trade anywhere, though it's not really anywhere sharp. Those people who are doing it, they know how they are doing it. They will be patient and wait for when they will enter the market, and whenever they enter, they don't want the market to enter into loss at all. Once they just enter, they instantly want the market to start going in profit. And you have to really learn some really special skills to know how to do that, so that once you enter, it will not go down but in your direction every time. So because if you go against you will lose more than you are looking for. Are you getting me? So it is not really easy. I don't like that kind of trading. That's why I don't encourage it. But if that's what you want to do, the strategy will be there to help you. Just that
I'll do intraday. The one that will start in the morning, maybe after 1 or 2 hours, I'll remove it.
So those people that trade in that do those scalping, they trade majorly on the 1 minute time frame. On the 1 minute, the maximum time frame they go is 2, 3, 5 minutes. After 5 minutes, they are out. They don't trade on any other time frame. So 1 minute majorly, that's where they trade. Some people trade in 30 seconds charts. There are charts that are 30 seconds. So, but we don't have it on MT5. They use other platforms like TradingView to do it. So the thing now is, let's continue what we are doing.